Approximately 1.5 billion XRP remains on exchanges right now. That is down 57% from the peak. Goldman Sachs is holding 153.8 million in XRP ETFs. And Pornhub just replaced Tether with a regulated stablecoin, which tells you more about where the stablecoin market is heading than any analyst prediction will. Tonight, we are going to connect four things that most channels are covering separately and missing entirely as a result. What the XRP exchange reserve data actually means for the supply shock thesis, including the honest counter-arguments that deserve to be addressed rather than ignored, what the Pornhub Tether replacement signals about the regulated stablecoin transition, and specifically what it implies for RLUSD, where Flare sits in the current market structure, and why the on-chain numbers make the comparison to XRP in 2017 more precise than most people realize, and the FOMO psychology data, why retail investors consistently buy tops and miss bottoms, and what the behavioral economics behind that pattern tells you about positioning right now. There is a section in this video on the specific exchange reserve data, including the bearish counterargument that 14 to 16 billion XRP may exist across broader platforms beyond standard exchange tracking, that I want you to stay for, because the honest version of the supply shock thesis is more compelling than the version that ignores the pushback. Stay for that. This is not financial advice. Nothing here is a recommendation to buy, sell, or hold any asset. This is educational analysis based on publicly available on-chain data, regulatory filings, and documented market structure research. Always do your own research and consult qualified financial professionals. If this is the kind of channel that gives you the counter-argument alongside the thesis, hit the like button now. Subscribe with the bell on because the Clarity Act window and the RLUSD deployment timeline are both active. Let's go. The supply shock thesis. Honest version. Start with the XRP exchange reserve data. Stated precisely, including the parts that complicate the headline narrative. XRP's exchange balances have declined approximately 57% from their peak, reaching what analysts are characterizing as 8-year lows. Approximately 1.5 billion XRP currently sits on major tracked exchanges. At current prices near 1.35, that represents roughly $2 billion in immediately liquid XRP available for purchase on public order books. Against that backdrop, Goldman Sachs disclosed $153.8 million in XRP ETF positions in its Q4 2025 13F filing, the single largest institutional XRP ETF holding from any Wall Street firm on record. ETF inflows for XRP have been running at consistent weekly volumes, and institutional accumulation from entities that do not report through standard exchange order books is ongoing. The supply shock thesis in its simple form says declining exchange reserves plus rising institutional demand equals a price squeeze when demand exceeds the available liquid supply. That thesis is directionally sound, but here is the counter-argument that deserves to be addressed directly rather than ignored. Analysts tracking broader platform data estimate that between 14 and 16 billion XRP may exist across non-standard platforms, OTC desks, and custody solutions that do not appear in the standard exchange reserve metrics. If that supply is accessible to market participants at scale, fast transfers can refill order books faster than the headline reserve decline suggests. Additionally, Ripple's escrow releases, up to 1 billion XRP monthly, provide ongoing supply even if 70 to 80% is re-escrowed. The honest version of the supply shock thesis is not, exchange reserves are low, therefore price must spike. It is, if institutional demand accelerates materially while accessible liquid supply remains constrained, XRP could enter periods of rapid repricing driven by scarcity dynamics rather than incremental news flow. The conditional matters. The Clarity Act passage and the Mastercard RLUSD go live are the two developments most likely to trigger the institutional demand acceleration that converts the supply constraint from a background condition into an active price driver. Comment. Honest thesis below. If you want more videos that present both the bull case and the legitimate counter-arguments, because this community makes better decisions when the analysis is complete. The Tether signal, what it actually means. Now let me give you the Pornhub Tether story, because the channel that calls this correctly before mainstream crypto coverage does, is the channel that its community trusts most, and the correct read is more nuanced than either Tether is dead or this is nothing. Pornhub replacing USDT with USDC for creator payouts is not primarily a story about Pornhub. It is a data point in a regulatory transition that has been running for over a year and is now producing visible market behavior. MiCA, the European Union's markets and crypto assets regulation, designated Tether's USDT as a significant electronic money token in 2024, imposing volume caps that effectively required EU-regulated exchanges to restrict or delist USDT for retail clients. Coinbase Europe, Bitstamp, and Kraken's EU entities all restricted USDT spot trading for EU retail customers in January 2026. The EU approved 10 stablecoin issuers under MyCA, explicitly excluding Tether from the list. USDC, issued by Circle with full MiCA compliance, is the primary beneficiary of that regulatory transition in Europe. In the US, the Genius Act stablecoin legislation, currently in Senate Banking Committee, would establish a federal framework that Tether's existing structure may not satisfy, while RLUSD's NYDFS regulated architecture is specifically designed for the compliance requirements that federal stablecoin legislation is converging toward. The Pornhub announcement is the early-stage visible signal of a much larger regulated stablecoin transition that is being driven by MiCA in Europe and that the Genius Act will accelerate in the United States. Every platform, every payment processor, and every institution that currently uses USDT faces a version of the same decision Pornhub just made. And the decision timeline is being set by regulatory deadlines, not by voluntary preference. RLUSD's positioning in that transition, regulated, NYDFS approved, issued on the XRP Ledger, makes every accelerating USDT displacement event a RLUSD adoption tailwind, the FOMO psychology, why most people buy wrong. Here is the behavioral economics section, because understanding why retail investors consistently buy tops and miss bottoms is the framework that determines whether you are positioned before the move or chasing it after. The psychological mechanism is documented and consistent across market cycles. When an asset is declining or consolidating, the emotional experience of buying is uncomfortable. There is no social confirmation, no excitement in the community, no fear of missing out. The decision to buy requires conviction without external validation. When an asset is breaking out to new highs, the emotional experience reverses entirely. Social media coverage intensifies, community excitement builds, price charts show dramatic green candles, and the fear of missing a generational move overrides rational position sizing. The result is a consistent behavioral pattern. Retail capital is most available and most willing to deploy precisely when prices are highest and risk-reward is least favorable. Institutional capital operates on the inverse cycle. Buying accumulation phases when retail is disinterested and price discovery is happening in illiquid conditions, then reducing exposure as retail FOMO peaks and liquidity is abundant. The XRP community's discussion of what bag size creates generational wealth is a real and legitimate question, but the honest answer is not a specific number. It is a specific behavior. The holders who accumulated during low sentiment consolidation phases in previous cycles captured returns that holders who bought during excitement phases could not, regardless of position size. At current prices near 1.35, with exchange reserves at 8-year lows, Goldman Sachs holding $153.8 million in XRP ETFs, and Mastercard's RLUSD integration going live in weeks. The sentiment profile is consolidation, not excitement. That is historically the profile that precedes rather than follows the move. Flare. Where it actually stands here is the Flare assessment, grounded in the on-chain data and the analyst projections that exist right now, rather than in the maximum optimism framing. Flare currently trades at approximately 0.011 to $0.12, with a market cap near 1 billion and a circulating supply of approximately 82.6 billion FLR. The all-time high was 0.0797 in January 2023. 150 million FXRP has been minted on Flare, representing approximately $200 million in XRP capital brought into Flare's DeFi ecosystem, with 85% actively deployed across protocols. The Flare drop distribution, 36 months of consistent sell pressure, concluded in early April 2026. FIP.16, the governance proposal to cut inflation 40% and introduce protocol MEV capture, is in active voting through April 24th. Conservative analyst models for FLR place the 2026 range at 0.017 to 0.021 based on current growth trajectory. The $0.50 to $1 long-term targets in institutional model scenarios are contingent on FXRP scaling toward the 5 billion token target that Flare's CEO has articulated, a significant adoption milestone that is currently at 3% of that target. The comparison to XRP in 2017 is structurally interesting but requires context. XRP in 2017 had already established institutional partnership announcements that were driving awareness. Flare's equivalent catalyst sequence, FIP.16 Passed, institutional onboarding without foundation guidance, and the FXRP growth curve accelerating is the prerequisite for that comparison to become operationally meaningful rather than aspirational. What is verifiable right now? The Flare drop sell pressure has ended, the tokenomics restructuring is being voted on, 150 million FXRP is an active DeFi deployment, and the price is near all-time lows relative to its 2023 peak. That combination, supply overhang removed, tokenomics reforming, adoption growing, price compressed, is the structural setup that the XRP in 2017 comparison is attempting to describe. The cycle difference argument. Here is the cycle difference argument, because it is the most important framing for understanding why the behavioral advice to buy consolidation rather than chase breakouts applies with more force in the current environment than in any previous cycle. Every previous XRP cycle was driven primarily by retail speculation and sentiment. The 2017 cycle was retail FOMO on crypto headlines. The 2021 cycle was retail FOMO amplified by DeFi summer spillover and NFT mania. Neither cycle had Goldman Sachs holding a $153.8 million ETF position at the bottom of the consolidation phase. Neither cycle had Mastercard integrating a Ripple stablecoin for live settlement. Neither cycle had the BIS Project Agora blueprint, the Clarity Act and Senate Banking Committee markup, or Pakistan's regulatory barrier dropping to activate an existing RippleNet corridor. The institutional infrastructure that was absent in 2017 and 2021 is present and documented in 2026. When institutional demand, which operates on allocation mandate cycles and compliance approval timelines rather than on retail sentiment, deploys into a supply structure where exchange reserves are at 8-year lows and operational ODL reserves are locking additional float, the price dynamic is categorically different from retail-driven cycles. The retail FOMO component will still be present when the breakout comes. It always is. But the institutional demand layer underneath it is the structural driver that previous cycles lacked. And that structural driver is what converts a sentiment-driven pump into a sustained repricing event. If this gave you the complete picture, the honest supply shock thesis, including the counter-arguments, the Tether regulatory transition read, the FOMO behavioral economics, the grounded Flare data, and the cycle difference argument, smash the like button right now. You stayed for the full analysis, including the section on the supply shock counter-arguments that most channels covering this story are skipping, and that tells me you are approaching this with the seriousness that produces better outcomes. Share this with one XRP holder who is waiting for confirmation before buying, because the behavioral data on who captures generational returns and who chases them is the most useful thing I can give that person right now. Subscribe and hit the bell because the FIP.16 Flare vote result, the RLUSD go live date, and the Clarity Act Senate window are all moving in the same calendar window. And when any of them crosses the threshold, the full breakdown is here within hours. Tell me in the comments, are you currently accumulating in this consolidation phase, holding what you have, or waiting for a confirmed breakout? And which development do you think moves first, FIP.16 Passed or RLUSD go live? I will see you in the next one.